you are listening or watching Radio Afinju. The time is 10 a.m.
Ẹ bá mi pè é o. Àfíjù. Kí lorúkọ rẹ̀? Àfíjù. Rédíò. Àfíjù. Gbogbo èèyàn ló ń gbọ́ àfíjù. Gbogbo èèyàn ló ń gbọ́ àfíjù. Lórí WhatsApp. Àfíjù. Instagram. Àfíjù. Facebook. Àfíjù. Lórí X. Àfíjù. Lórí YouTube. Àfíjù. Lórí TikTok. Àfíjù. Kí lorúkọ rẹ̀? Àfíjù. Ẹ bá mi pè é o. Rédíò. Gbogbo èèyàn ló ń gbọ́ àfíjù. 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 Rédíò àfíjù. Rédíò àfíjù. Rédíò àfíjù.
For the best music,
show me capital business, show me character dickiness, show.
season sport presentation,
Round 10 begins. If they complete this round,
balanced and objective news reportage, and all-round entertainment. Listen to the jewel of the pack of radios in this class. Tune in to Radio Afinju right here in Oshobo, Osun State.
The time is 3 minutes past the hour of 10 in the morning, and it is another Wednesday, and so it is time for Understanding Finance here on Radio Afinju. This is where we demystify the world of finance, one conversation at a time, where we give you the confidence to put your finance in order, to put your money in order. And like I always say, when it comes to finance, it is something every single one of us, we have to deal with at different points in time. Like, there is no human, it doesn't even matter the kind of human being that you are, we have had to deal with finance, we've had to deal with money. So how do you manage your finance to ensure that you are safe, you are secure, and that you're doing things the right way? That and many more are the things that we discuss on this show, and it's worthy of note that starting next week, this program will now be on Mondays by 10 a.m. in the morning. Yes, giving you that head start into the week, so that as you are entering into a new week, you already know the right thing to do as far as your money, as far as finance is concerned. So I welcome you to the show this morning. My name is Pearl Durotoye, but of course, I don't do the show alone, because I cannot do this alone. I have here with me the one and only, but before he says a word into the microphone, quickly, Radio Afinju, you can find us on all social media platforms. We're on Facebook, X, YouTube, all as Radio Afinju. Go to YouTube, search Radio Afinju, subscribe and turn on your notifications. Same thing for Facebook, turn on notifications. Follow us on our social media pages so that you can be aware whenever we are going live. Let me say a quick hello to our Facebook audience. Sam Anoluwaderemi saying good morning, welcome on board. I am welcoming you on board as well, Sam. Thanks for joining the show this morning. Abiola Boluwatifa is also saying good morning. Good morning to you as well, Abiola. So with me in the studio this morning, again, I have Mr. Omokorede Agiri, chartered accountant, and over the past few weeks, we have been discussing, having different conversations about finance, and he's here once again this morning to continue the conversation. Good morning, Mr. Akorede.
Hey, good morning there. How are you?
I'm fine, thank you. Good to have you here once again on the show. Or should I say, it's good to have each other here because we are both anchoring the show. So we are in this together. Esteemed Temitayo, good morning to you as well. Thanks for joining the show this morning. So I'll go on a very quick break now. And then when we come back, we'll continue the conversation from where we stopped last week. Don't go anywhere. This is Understanding Finance. Okay, you're welcome back to the show. If you're just joining, this is Understanding Finance on Radio Afinju, where we are shining a light and demystifying the world of finance, one conversation at a time. Last week, we were still talking about the basics of finance and everything, and we stopped at where we were having the conversation about the key components of finance. We talked about what finance is, the pillars of finance, and then we were about to go into the key concepts of finance. So maybe we'll just we'll do a little recap of last week so that we are sure that you are following us before we go into the key components of finance. So I'm going to hand over the baton to Mr. Omokorede Agiri, where it continues from where we stopped last week. Over to you, sir.
Hey, thank you, darling. Good morning, everyone. Thank you for being with us thus far. My uncle has done justice to quite a lot of what we did last week, over the past 2 weeks rather. And what we couldn't touch last week was the key concept of the 3 pillars of finance. We talked about what finance is, the 3 pillars. Over the past 2 weeks, and then we'll be moving over to some key concepts in 3 pillars of finance. The first one is call something time value of money. Time value of money. It is the most important concept in finance. And what it's telling us is a naira today is worth more than a naira tomorrow. Why? Because a naira, if properly invested today, can actually earn interest, and then from there it will multiply. It depends on the kind of a rate you are applying to it. We have simple interest rate, and we have a compound interest rate. And then another thing is the purchasing power of money is not stable. You understand? So what do you mean by time value of money? It is the foundation for concepts like interest, the present value of money, and the future value of money. Okay. Now, let me put it to you, Pearl. If you are asked to take a 10 million naira today, compared with, investing a 1,000 naira for you for the next 6 months, which one will you prefer to take?
If I'm to take 10 million
naira today,
yeah, or 1,000 naira,
invested for you at the 10% compound interest for the next 6 months.
10% of 1,000 naira.
Yes.
Is that not 100 naira? I don't know what's the mathematics.
Fine.
I don't know.
Okay, fine. Let me put it very well.
Okay.
A 10 million naira today, compared to a 1,000 naira invested for you on a daily compound interest rate of 10% for the next 6 months. Which one will you prefer?
The compound interest rate, that's 100 naira.
Yes.
Per day.
Yes.
For the next 6 months.
Yes.
I think I'll go with the 10 million.
You'll go with 10 million?
I think so.
Okay, good.
I don't know if that's the right decision though, but I think that's what I'll do.
My dear fellow listeners, please make sure you ask questions. Make sure you surround yourself with bright minds. Make sure you don't fail to ask questions when you don't know, when something are evading you. Let me tell you, that 1,000 naira invested at 10% compound interest. We have something we call multiplier effect.
Okay.
Yeah, the interest on daily basis. Now let me break it down a little bit. You have a 1,000 naira today. When it's tomorrow, you have 1,001.
Okay.
When it's next tomorrow, you have 1,001 times 1.1.
Times 1.1.
Exactly.
Okay.
You know, you'll be taking that money, you'll be reinvesting. You take it, you invest. You take it, you
Can't I
invest.
do the same for my 10 million naira?
No, wait.
Okay.
You don't have the option of, investing that 10 million. Fine. If I'm telling you, I'm going to give you a 10 million naira today, do you know it's even possible? The moment you pick that 10 million naira, I might decide to even delay it. Yes. Yeah. There is this story I read about. It's not really a story, but I think it borders on common reasoning. If you see a rich man who's asking you, "What do you want me to do for you?" I think it's better for you, don't ask for money. Ask for ideas.
True.
The moment you take that one, the moment you decide to take money from a rich man, he will just such a person will just belittle you. Your vision are quite short-lived. You understand? Now, a 1,000 are invested at 10% daily daily compound interest. The interest, the multiplier effect of that 10% is 194,571.
After 6 months?
Yeah, after 6 months. So if you multiply by 1,000 naira, it's going to give you 194 million, almost 195 million naira.
Million?
Yes.
That means it's that's the mathematical aspect that I don't understand then.
So, like I said the other time, then the purchasing power of money. Of course, I always have this reservation when, like, say, I borrow you money or you borrow me money. Let's say about 2 years ago, I wanted to. I've not been able to redeem my, my pledge of paying you back. Maybe I borrowed for just a month or a week, but I couldn't do that. Now I want to refund you this year. Is the worth of that money 2 years ago? Is it the same thing as now?
No, it's not.
Now, how do you now make the person who lend you the money, interest free? How do you want to, try to repay him or her for
if
having
anything, the person is even running at a loss.
Exactly. Because when you look at the purchasing power of 100,000 2 years ago, it's quite different from what you can take now. You look at the price index of foods and basic amenities, everything. In fact, the accommodation that was taken about 2 years ago, I can bet with you must have multiplied by 100% by now.
Yes.
So if somebody decides to loan you money because he felt compassionate with whatever you are tabling before him or her, and then you decide to just run away with the money, how do you want such a person to feel? I can remember vividly there was this guy sometimes this year who told me a lot of stories about himself, and I like, okay, fine, what do you want me to do? He said he wanted help. Okay, fine. Now I have a concept. Whatever I'm going to give, whatever I'm going to lend to you is something I can just dash out. Yes. The funniest part is that this guy promised to refund my money within a week. Up to today, he failed to pick my call. Now, there were even times I called him just to ask after how he's doing. It's just
ask for the money.
Exactly. So at times when you look at we were talking about raising money the other time, how to raise money to finance a project or to start up a business, that you have to have integrity. You need to have integrity.
True.
You need to be positive minded. People should see you as a person that is trustworthy, somebody that they can actually believe in his concept. Do you understand? So let's move over to what we're talking about, the time value. I think that brief explanation about the time value of money. Yeah. So then under that time value of money, we have I divided it into 3 phases. Yeah, we have interest, the present value, and the future value. What is interest? Of course, everybody knows what interest is.
Yeah.
You get a loan from any loan app and all those things. They tell you, go. If you borrow 500,000, you're going to pay 15 on it. If you borrow,
You pay 500 and 100 naira.
I'm telling you, you have to just be wise. So it has to just. I have to go back to my earlier word that says that surround yourself with bright minds. Don't be myopic in your vision. Don't do it. Don't do it in such a way that you want to go all alone. That okay, of course you can face it,
Especially when you are in the desperate situation.
Exactly. Do you understand? So interest, financing revolves around the time value of money. By saying that interest affects loans, the loans that you take, to build houses, to buy cars, mortgage and savings. And then when it comes to the corporate finance, interest influences what they call the cost of capital. That's a topic for another day. The cost of capital. It's something very, very simple. Cost. What is capital? What is cost? If you are raising a 10 million naira, what attributable cost is attached to it? If you can't raise it personally, then you're going outside. Of course, you have a bank A, bank B, bank C, microfinance bank, all these mortgage bank. Which one do you think is, it's the most suitable? There are some banks that it depends on the kind of project that you want to do. That they give you something they call moratorium period. If you are going into agriculture and you want to go and get a loan, I think the moratorium period is 6 months. Yeah.
What does the moratorium period? What does that? What's the meaning of that?
Thank you for that question. Moratorium period is they are going to give you a breathing space before they ask for the repayment, the first repayment of the loan.
Okay.
So if you are saying you want to get a loan, which is going to run
start
for
a poultry or something.
Yes. In farming, in agribusiness. Now, if it's going to be a 12 months, repayment period, that 12 months will actually translate into 18 months.
Okay.
So the first 6 months is going to be your moratorium period, something that they expect you to stabilize, to get fully accustomed with the business. Then by the 7th month, then you start your first repayment.
Okay.
So moratorium period is like a free period that they grant to anybody that goes into, most especially farming, most especially in agribusiness. So just the breathing space for you to get accustomed to that. Now the present value of money, we briefly talked about that. It's just like, okay, what am I holding today? I have a 1,000 naira money. I have a 1,000 naira. Yeah, 1,000 naira. That is the present value. Now it's left to you. That 1,000, is it something you want to be? You just want to spend lavishly, or you have a business mindset, or you think about how you got to have that 1,000 naira.
If you can implement the same means to make more of the money.
Exactly. No, what I'm trying to say is that let's say, for example, before you slept yesterday, you virtually had nothing, and then you were racking your brain on how to raise funds to come to office, and then before you know it, something just came up. You understand? And then you were blessed with a 10,000 naira. Now, the best thing for you to do is that you knew what you went through. You knew the kind of experience you had. There's some people that when they don't have money like that, they will like, they will turn to something else. Now, once you know what to pass through before getting what you have in hand, then it behoves on you to look inward. That how are you going to? Are you going to continue living like that? The moment you spend you finish spending one, how do you intend to raise another one? Do you have a vision? Do you have an expectation where you're expecting other money from? How do you intend to raise money? Some people are owing you, of course. You might want to just give some people, a little bit time, to pay back, as well as for them to, maybe you have one or two discussion that they decide that fine, please give me some time, Mom. How are you going to cope between that period, that gentleman agreement that you reach with the
And
person,
when they will
and
actually
when
pay back.
they will actually pay back? Now, you have to just try and look at your environment, look at what you're going to do, so that you won't find yourself in the same predicament over and over again. So the future value of money, which is the third one, is the value of what you have today, and then in the next foreseeable future, maybe let's say the next 10 to 3 months, how do you think you can invest what you have today? What do you think it can actually generate for you in the next 3 months? It goes around, when you have information about where to invest the little you have, or where to put that little amount you have. Maybe if it's going to be your personal business, if you're investing in someone else's, or if you're investing in a public liability company, how much do you think it will generate for you? When you invest part of it, how are you going to cope within that period when that future value will actually come down to you? You understand? So that is all about time value of money. And then a brief link between finance and the interests, the future, the present value, and the future value. Finance, of course, we know is managing money across time. It's just like, how do you manage the little you have? How do you manage the excess you have? How do you, whatever little you are having, how do you,
good use.
how do you put it into good use? How do you, sectionalize it? How can you not overspend beyond, your capacity? Because there are some people, the moment they start earning a little bit above what their expectation is, their lifestyle will change. Yes, it's
Their taste will change drastically.
we all know how much we earn here now. Let's just say, for example, I think just decided, oh, fine, he wants to quadruple whatever we are earning. I can bet with you that the local pub that I used to visit before, I'll just change it. Honestly, a lot of people will change. People want to express themselves.
That's when you will start noticing that their service is not that
it's
good.
not that good,
or the aesthetic is not very beautiful.
So you have to just know how to streamline your expenses in such a way that it will be retaining. You'll be retaining some little amount of money to invest in the future. Then the second one, apart from the time value of money, is risk and return. There's a maxim that says that the higher the return, the higher the risk, or the higher the risk, the higher the return. The lower the risk, the lower the return.
So the more risk you are willing to take.
Yes.
It's almost like a gamble.
Yeah.
Especially in fact, I think a lot of things that has to do with finance, it's usually a gamble, and you have to be very tactical.
That's why I said you should surround yourself with bright minds. Ask questions. Don't be delusioned. Be proactive. Be pragmatic. Be rational. Don't be too. A lot of we take a lot of decisions when we are angry, when we are happy, or
maybe because everybody is doing it.
I want to delve into it as well, and you don't have the nitty-gritty of what surrounds it. Oh, because this thing is moving, let me go and invest in it. Everybody's making it. You understand? When I said the higher the risk, the higher the return, something came to my mind. Of course, it's not what we're supposed to be doing, all this online betting. There are some people that will tell you that, wow, this match and this match, it's possible for them to just be, it's possible. I know they will score one goal. You understand? They now decide, oh, fine, I have a 1 million I want to, take to bets. They will just say, okay, fine. If it's so goals, if it's 1.05, they will have calculated that since I have a 1 million, that means I'll be having a 50,000 return on that money the moment a goal comes in like that. So they're ready to do that. And there are some that puts they carry about 5, 10 games, 20 games, 30 games, hoping to hit the jackpot and all those things. Of course, the money is quite minute, and I must not, encourage things like that. Rather than you channeling all your energy towards betting, towards all those things, why don't you make good use of the brain and start working on many things? We have so many things that
actually
we can
solve
do
problems.
to actually solve problems. Look around you. Look at the problems that people have in your area.
And they are willing to spend money to solve.
Be a solution provider to that. Be a solution provider to that. So the higher the risk, the higher the return. The lower the risk and the lower the return. Don't let me just. When you look at this cryptocurrency, that is what really pushed people into all these multi-level, or what's these MMM,
pyramid schemes.
The pyramid schemes and all those. That was what actually pushed them into it. And not forgetting that these people that established this, they have some money they can actually play with, hoping that when you people now believe in that scheme,
yes, after they've paid the earliest people over a period of time, and every other person is like, okay, this is actually working, let me put my millions inside.
They were willing to risk their money, you understand, and hoping to catch as many people as possible into their drag net, and then once they finish, once they're able to realize what they want to realize, they'll just vanish into thin air. You understand? So even if I thought you're going to take a risk, I prefer you take a calculated risk. Very, very calculated. Look at it very well. There are so many banks, so many companies that can't run away with your money. There's so many, all these small business that you can actually invest. Some people that you can monitor. When you monitor their progress, you'll be taking return back from them. You understand? We in raising. The other time I wanted to talk about the raising capital. We have some people they call angel investors. We have a venture capitalist. We have some people who actually have that, very good mindsets, assisting people. Various NGOs, various organizations who are willing to donate into a just cause. You understand? So
some even without interest.
Yes, without interest. So let's go over to the third one, which is interest rate. We actually deal with that one when I was talking about interest and present value and the future value of money. That is the price of borrowing money. What price are you going to pay back, or what interest are you going to take back from the interest? From the loan, from the money you are investing in another man's business.
Okay.
When you look at it, is this something that is going to be sustainable? Is this something that you just wanted to have a quick return on it, and once you have the quick return on it, and then you withdraw your money and move? So it depends on the kind of investment that you want to do. If it's going to be a short-term, medium term, or a long-term investment, you look at the interest. Now, if you are investing in a long-term asset now, that means it's going to take you a longer period of time for you to generate back your money. So once you look at the interest rates, it should be a guide, like the first analysis we did when we resumed this class. So I believe interest rates is something that you have to critically look at it, if it's going to be a simple interest rate or a compound interest rate. Of course, if you are going to be giving everybody the chance to speak about interest rate, most people prefer compound rates. Compound interest rate. So
why do you think so?
Wow, because of the multiplier effect. I said multiplier effect. The multiplier effect. So and then the fourth one is assets, liabilities, and equity.
Well, sorry to cut you short. Before we go into assets, liability, and equity, let's quickly go on a very short break now. When we come back, we're still going to continue the conversation on the key components of finance. So don't go anywhere. Understanding Finance will be right back.
For up-to-date tori wey no get filter. Politics matter. Sport.
Ya lo hace. Pierna derecha, directo al arco. ¡Golazo! ¡Golazo!
culture, Naija and obodo oyibo music. Advertisement wey go reach your customer home and abroad.
This is incredible.
Na on top Radio Afiju you go hear am.
You can't be serious.
Na so Radio Afiju be baba for all radio stations wey dey Osogbo, Osun State. Radio Afiju na better level for broadcasting.
Alrighty then.
For an ultimate entertainment experience. An all-round gist with your spicy honey drops. Yes. Don't miss the fun, excitement, and updates on Afinju Arena. Only on Radio Afinju.
Apology for waiting, say don't play, or you will learn.
Champions League knockout of all time.
Ẹ̀yin olólùfẹ́ eré ìdárayá ẹ̀yin dà. Ó ti yá láti gbẹnu sí ètò tí yóò máa gbóná rìtìrìtì yeruku lálàlàlá lórí pápá àfínjú. Ìròyìn wo lẹ fẹ́ gbọ́ nípa eré ìdárayá? Ṣé ti bọ́ọ̀lù aláfẹsẹ̀gbá ni? Aláfọwọ́jù sínú apẹ̀rẹ̀, ẹ̀yìn orí kankéré, tàbí ti tábìlì, ẹ̀kẹ́ òmùwẹ̀, tàbí tàwọn abẹ̀sẹ̀ ya máàpù sójú ẹni. Má dààmú jìnnà wá gbanu tí Mosúnmọ́lá ọmọ Adégbèrò Big Mo. Níbi tí yóò ti máa wà yín sí rìn gbé yín débẹ̀ já yín sí ìmọ̀ tó ń lọ lágbolé eré ìdárayá lórí ètò pápá àfínjú ni ní gbogbo ìyálẹ̀ta aago 11 sáago 12 ọ̀sán gbẹ̀rẹ̀ lójoojúmọ́ lórí ìkànnì rédíò àfínjú. Àyà kàtàkàtà Big Mo ti wọlé dé gìjà. Big Mo àti ikọ̀ àwọn àyànnà eré ìdárayá lèmi yóò ganu sí lórí ìkànnì rédíò àfínjú. Ẹ má lọ gọ̀ọ́ pápá àfínjú ni. Ẹ̀yin tó mọ ìgbádùn tó kí fọ́fọ́ mìrì gidi kí gbẹ̀ngbẹ̀ ẹ máa bọ̀ láríyá àfínjú. Àríyá àfínjú lẹ́ẹ̀tì máa jẹ̀gbálálà àwọn ògbóǹtarìgì pédépédé tí wọn yóò máa fi ẹ̀fẹ̀ dàílùtì àwọn orin fújì, àwúrèbe, àpàlà, jùjú àti bẹ́ẹ̀ bẹ́ẹ̀ lọ fún ìgbádùn yín. Àríyá àfínjú ẹ má míìsì ẹ̀ nítorí pé live and direct gangan ni ó máa jẹ́ lórí àwọn àti ayélujára wa bíi Facebook àti YouTube. Àríyá àfínjú ló wà fún ìgbádùn rẹ̀.
Ìpèníjà pọ̀ láwùjọ, aráàlú ń pàráàrò, wọ́n ń fojú sọ́nà fún ìdàgbàsókè. Bẹ́ẹ̀ olóṣèlú náà ń pé adìyẹ ń làágùn, ìyẹ́ ni ò jẹ́ àrí. Ó wá di dandan ká mójú ajé kò ní sọ, ká ṣàkójọ àwọn ìpèníjà tí ń bẹ láwùjọ, ká tẹ́ pẹpẹ rẹ̀ fáwọn adarí ìjọba kí wọ́n sì sọ ìgbésẹ̀ tí wọ́n ń gbé láti wá ojútùú sí wọn. Èyí ló bí ètò Gbàgede Ọ̀rọ̀ lórí rédíò àfínjú. Gbàgede Ọ̀rọ̀ ni ó máa ṣe ìfọ̀rọ̀wérọ̀ láàrin ará ìlú àtàwọn adarí ìjọba. Lórí ètò yìí a ó máa ṣàtúpalẹ̀ àwọn ìpèníjà àwùjọ, bẹ́ẹ̀ láàsì mọ fọ̀rọ̀wérọ̀ pẹ̀lú àwọn ìkàn ìjọba tọ́rọ̀ kàn láti lè mú ìtẹ̀síwájú bá àwùjọ wa. Adédayọ̀ Dẹ́rínú ọmọ wọn lẹ́sẹ̀ kòjọ́mọ́ ònù ni ó máa tọ́kùn ètò. Ẹ lè wo rédíò àfínjú lórí àwọn àtẹ ayélujára Facebook àti YouTube, bẹ́ẹ̀ lẹ́sìn lè gbọ́ wa lórí rédíò Garden. Rédíò àfínjú, ìlànà ìgbóhùnsáfẹ́fẹ́ tí ò lábàwọ́n. Gbàgede Ọ̀rọ̀, ètò tó ń yànnàná ohun tó rújú láàrin ará ìlú àtijọba, kò ṣeé má gbọ́ ni ẹ gbà bẹ́ẹ̀.
Gbàgede Ọ̀rọ̀.
Na my hustle be this. Na here I dey see my daily urgent 2k o. Ìhàyín ni mo ti ń rí ẹgbẹ̀rún méjì náírà pàjáwìrì tèmi lójoojúmọ́. On this program, we will bring people from different business backgrounds to come tell their stories and share insights with us. Gbogbo ẹ̀yin oníṣẹ́ ọwọ́, oníṣòwò, ẹ gbáradì. Ètò ti kàn yín ní rédíò àfínjú. Bó o lẹ ti bẹ̀rẹ̀, kí ni àwọn tójú yín rí? Kí lẹ̀ ń tà gangan? Bó o lẹ sì ti ń tà? My hustle will give you a direct insight into the business world. Join Aderonke Lawal, Ayoka Ọmọ Àkànmú on My Hustle every Wednesday 4 p.m. to 5 p.m. on Radio Àfínjú to have your mind blown. Ẹ lè tẹ̀lé wa lórí gbogbo ìkànnì abánidọ́rẹ̀ẹ́ wa pátápátá ní Radio Àfínjú. My Hustle, my urgent 2k.
You're welcome back to the show. This is still Understanding Finance. If you're just joining, this is where we are demystifying the world of finance, one conversation at a time, and also helping you make better financial decisions. We've had a lot of conversation this morning, and we are still on it because Mr. Giri is still talking about the key components of finance, and he was about to delve into assets, liability, and equity before we went on that break. So right about now is going to continue on that note.
Thank you. Assets, liabilities, and equity. Asset is something. It's something that can be touched. It can be physical or it can be non-physical. Asset is something that you have, which has value. When I said physical, like a house, a building, a
Is
car,
like something you own?
Yeah, something you own.
Okay.
That can be turned, into monetary value in the future.
Okay.
Something you decide to just invest in. Whether it's going to be for personal use or for business, but something that you can actually use in the future,
Later.
to generate money.
Okay.
So they have asset is, like I said, can be physical and can be non-physical. Physical, building, car. Non-physical, asset is actually divided into two: the fixed asset and the non-fixed asset.
Okay, it's different from the physical and non-physical.
The physical. No, the fixed asset is physical and non-physical.
Okay.
You understand? So the fixed asset are something that you can touch, or you can either touch or not. You understand? And the non on an asset, for example, you made the payment on electricity now. Something, of course, you cannot convert one back into money.
No.
The most liquid form, or the most liquid is the cash in hand or cash at bank, and then the physical stock, and then debtors.
Okay.
You understand? So that is non-fixed asset. We call it current asset, but you can at the same time call it non-fixed asset. Now, the fixed asset is something you can see, and I said there's another part of it what you cannot see. In the business concept, we have one as something you can actually see and touch. Building, cars, furniture, properties, any form of properties. Now, the liability are something you owe. Maybe you got a loan from someone, from a third party. Your trade credit. Your trade creditors.
What about leases?
Leasehold.
Like if you are if you not the person that owns the place now, like what own yakini for a period of time. Does that fall under liability as well?
It's a liability. It depends because if the lease, if it's like a higher purchase, for example, now at the end of certain period you'll be paying back installment. So the installment is what you're supposed to capture as a liability. No, because the moment you mention lease, lease are actually classified into three.
Okay.
We have two, but the third one is not actually a lease. It's called hire purchase. We have operating lease and we have a finance lease.
Okay.
After that, we have hire purchase.
Okay.
Maybe you should not delve into that. It's a topic. It should be a topic for another time.
Yeah.
So, the lease, the liability now, something you owe. Your trade creditors. If you are having something like a liability in form of tax, the last year, if you, as a company now, let's say you, even as an individual, but who has a small business, you're supposed to remit whatever tax you're for a period. Let's say pay as you earn. You have a business, you're paying yourself some salary, just to make sure that you are not mixing business with pleasure. Now you're supposed to pay your tax. Now the payee you're supposed to pay for last month is due by 21st of the following month. We are on 23rd, right? Yeah, 24th
24th,
rather.
yeah,
So
24th.
it's due, has been due as far back as Sunday. But unfortunately, you wrote the check by Friday. They couldn't get it credited. So as of today, if the check has not been cleared, it is a liability. You're supposed to know. You are supposed to recognize this as a liability.
Okay.
Something you are owing outsiders that is supposed to, be taken off your purse and to be paid to outsiders. The trade creditors, those people you approach, for them to give you goods on credit, hoping to pay them back at the future date. They are trade creditors. And then some other form of loan where you get debenture loans. When you're talking about company, talk about the debenture holders, the preference shareholders, and all those things. You understand? So then equity is, let me just put it in a linear equation, is asset minus liability. Now let's say you have 100 million now that you invest into business. You're able to acquire assets worth about 60 million, and you are owing a 30 million naira as liability. So it's going to be 60 minus 30. So the 10 million
equity
is for equity. Let's just put it in that simple word. As well, moving on, you get to learn about that. So in business / accounting, like I said, is asset minus liability. And then the share capital that you raised. We're talking about share. I think it's in our maiden edition that we talked about the share capital. When it comes to business, when I talked about authorized share capital, then issue share capital. Of course, we're going to get to that, but there's no way you can talk about equity without talking about business. We have something we call retained earnings as well. Retained earnings also forms part of equity. The share capital plus retained earnings, as well as other reserves or other comprehensive incomes, forms what an equity is. Now, when you talk about business, equity is for the core owners of the business. And who are the core owners? The ordinary shareholders. Ordinary shareholders. Because we have preference shareholders.
Okay.
Now the difference between the preference shareholders and ordinary shareholders is the ordinary shareholders are the risk takers. Whether the company makes profit or not,
they bear the risk.
They'll bear the risk.
Okay.
You understand? Now the preference shareholders always come with interest rate tagged to their shares. So whatever even if the company is making a loss, that interest that you had agreed with them from initial, they must get it. It must form part of the loss the company is making. So that's the reason why when company makes huge sum of money, let's say for example like the 100 million that we talked about the other time, if the preference shareholders, if their investment in the company is let's say 10 million naira, 15% preference shares. So they will just calculate 15% of that 10 million, not the 100 million that they make as a profit.
Okay. So even if the company makes multi-millions in the future, it is still that same
15% of the amount of shares
because they
don't have in that company.
A huge chunk of the risk.
So it's going to be that 15% of 10 million is how much? It's 1.5 million. You understand? So it's 1 point. So it's going to be that 1.5. That is what they're going to take from the whole of the 100 million, paid to them, and the remaining 98.5 will be shared amongst the ordinary shareholders.
Okay.
So that also goes for the debenture holders, or another forms of loans that is available to the organization. So when you talk about then it's equity. In short, when you look at investment, equity talks about stocks and shares. The amount of stocks and share that you have, in an organization that is listed on the Nigerian Stock Exchange. You get so. That's you being a part owner. It's just it just signify that you are a core owner, not preference shareholders, not somebody who is giving loan. No, you are giving your all to the organization to exceed. So the few takeaways that we have about equity is that it's all about equality. Equality in the sense that if you are investing, whatever profit is attributable to the company at the end of the year is going to be distributed to you according to what you are able to pull up for the existence of the organization. So likewise, the loss, and it's about equity. Everybody being treated fairly as well as justice. You understand? So the last one for the day is what we call liquidity. Liquidity, when you look at it, what comes to your mind when you talk about liquidity?
Selling off, I think turning, maybe like converting into, I don't know.
You are talking from an informed angle, but from an uninformed angle.
I don't know which one is informed angle and uninformed.
Yeah, it's because you're a little bit exposed. You understand? So when you hear about liquid or liquidity, what comes to your mind?
Like, is it turning everything into like selling off whatever is left of the company and then sharing whatever it is that is gotten from after selling it off, and then everybody goes there, or turn it to physical cash? Or I don't know.
No. Really, and in a layman's language, when you hear liquid, something is liquid, you think it's
free flowing.
Yeah, liquid. No, when you think it's water.
Yeah, it's free flowing.
Yeah, it's free flowing now. Then when in business or in finance, let's say, when you talk about liquid, you might ask me a question now that, okay, fine. Sagari, please, can you get me some change? Oh, I'm not liquid. I don't have much on me.
Okay. So that means so does liquidity have to do with physical cash now, or physical money?
Or near money.
What?
Physical money or near money.
Or near money.
Exactly.
Okay.
So it's about, having something you can easily turn to cash within.
Okay. Oh, I see what you're talking about.
You understand?
Now.
So how much liquid are you? And then we will get to a point where we talk about over trading and under trading. The moment you have enough cash on hand, you don't put it into good use, definitely you're not taking advantage of investment opportunities, which can actually erode the purchasing power of that money.
Just like when you are saving.
Exactly. Even if I thought you don't have anything to do with it, don't leave it in the bank. Make sure you that money that you have, start earning something from you. You understand? So liquidity, like I said, is the ease and speed in which an asset can be converted into cash without losing significant value. Yeah, the more liquid an asset is, the faster it can be. Now, when I say the more liquid an asset is, the cash in hand is much more valuable than that stock you have in the store.
This is quite it's quite interesting, and it's even getting more interesting by the day, but sadly we have run out of time, so we may not be able to get into that. Maybe next week we'll continue from where we stop for today on the show. So a big thank you to all our listeners, to you watching, you listening to us, watching or following on our social media pages. Thank you for joining the show this morning, and a wonderful thanks to my co-anchor, Mr. Omokorede Agiri, for sharing once again on the show, the things we need to know about finance. Don't forget, you can still join other conversations on our social media pages when you join us on Facebook, YouTube, X, all at Radio Afinjo. You can listen to our other shows on our website at www.afinjofm.com or go to radio.garden, search for Afinjo, and you will find us there. We have to go now, so join us again same time next week, 10 a.m. on Monday. Mondays Now. Understanding Finance will be coming to you on Mondays Now. Again, my name is Pearl Durotoye, and with me on the show has been
Omokorede Agri, and thank you for your time with us. We're going to make sure that every time you spend with us counts.
Yes.